Hey everyone, welcome back to Main Street Data, where we have the best charts and graphs for all your fundamental stock analysis. Now here, we're looking at the dashboard page for the company LYFT. We all know that Uber is their main rival, and self-driving cars may or may not be right around the corner. So this is an interesting company to analyze, so let's take a look at LYFT in a little bit more detail. First, we know that LYFT went public in 2019, and they initially had a stock price that was trading at above $60 per share. However, today, their stock price is trading at well below $15 per share. As a public company, this company has really not done well, and let's take a look at some LYFT-specific charts in a little bit more detail to understand why. So if we scroll down, the first chart that we'll look at is the second chart in the middle here. What this basically shows us for every quarter is what was LYFT's net income. We can see that since LYFT has been a publicly traded company, there has not been a single quarter where they've reported a positive net income. That means this company is absolutely bleeding money and maybe does not have that sustainable of a business model. The next chart that we'll look at is to the right, where we're looking at the number of active riders that the company has had on a quarter-by-quarter basis. Now, pre-pandemic, we're looking at around 20 to 21 million active riders. It makes sense that during COVID, when a lot of things were shut down, that this number dropped like a rock. And today, we're roughly at around that same 20 to 21 million number, which is fine. But after a few years, we would hope to see more growth for a company like this. So this is actually a pretty disappointing outcome. It's great that COVID is over and people are still getting out there, but we would have hoped that LYFT would have picked up additional riders since all the way back in 2020. Now, the last graph that we'll look at is all the way to the bottom on the right side here, and this is specifically looking at the working capital number. Where the working capital is actually negative, that means this company is either having to borrow money, sell off assets, or liquidate shares, or do something to just keep their day-to-day workflow going. This is actually a really bad sign for the company and really lets us know that this probably is not a sustainable business model and they really need to do something if they want to turn the stock around. Anyway, these are just some of the fascinating charts for LYFT. We have many more interesting charts for all the companies out there, so please take a look at us at mainstreetdata.com. Thank you.